Hi everyone, I hope you're all doing well, and today I'm talking about why Tattoo Chef will 5x. So I'm making this video even though I made so many Tattoo Chef videos this week, and this probably will be the last one, but I just wanted to make this video because it has been a bit of a tough week for Tattoo Chef. You know, there's been a bit of bad coverage really on it the last kind of week, and I thought it'd be really good just to go through the reasons why I'm so bullish on this one, where I see my price target going and how I make money on this one, because you know, there's been a lot of talk about the management and decisions from the management team have made with a lot of shares that they're selling and gifting. But I thought, you know what, let's just finish on a positive note with Tattoo Chef and why I'm so bullish on this company. So I'm going to go through some of the financials today and where I see this company going financial wise. It's not a video where I kind of talk about, oh, you know, Tattoo Chef's absolutely amazing because it has this big massive deal with Target and that's why it's going to go up in value. Today I thought, you know what, let's just go through some of the numbers today and where I see this stock going and why I think it's a really good investment for the long term. So if you could smash the like button, if you're new and you find this video useful, please subscribe, and if you do want to join the Patreon, the link is in the description. We do more videos like this on there. We do 2 exclusive videos a week, as well as buy and sell alerts, and a Discord with 600 members on as well. And if you do want to start buying some shares in Tattoo Chef, there's some links to some brokers in the description like Free Trade. You join through there, you also get a free share as well. But let's get on to Tattoo Chef and why I think it will 5x in the next 5 years. So basically, if you're kind of new to like watching my videos, basically my kind of philosophy when investing into stocks is to look at stocks, try buy great companies at good value, and try and get over the 2 to 5 year period is try and double my money, get 100% return. Sometimes it happens before the 2 to 5 years, which is absolutely amazing. We hit a home run and we can move on to the next one. But sometimes there's a few companies in there that I look and think, you know what, I want to get 100% return from this in the next 2 to 5 years. But realistically, I think this company has even more upside than that. You know, there'll be some companies that I buy that I think I could get 200, 300, 400, 500% returns from, and I see them. I try not go into them with expectations for them to do that, but these are a few companies that I think, you know what, I look at that and go, this is a really good opportunity. And Tattoo Chef is one of those that I'm kind of thinking, you know, I don't want to put too much pressure on it. I think I'll easily double my money in the next 5 years on this company, but realistically this is a company where I think there's a good chance I do make a 5x return on this company, and I'll go through some of the numbers and why I can see that happening. Now, I don't actually like putting exact price targets on where I see the company going, because quite often I'll get asked, you know, where do you see this company being in 2023, 2024, 2025? And I always say, I don't know. You know, there's a lot of things that kind of can happen in that time. So many things can change with the company. Guidance might be upgraded, they might acquire a company, valuations might change, we might be in a bull market, we might be in a bear market. So to put an actual valuation on the company is very tricky, but what I like doing is going, okay, what's like a worst case scenario, what's more than likely going to happen, and if we have a, you know, amazing bull market, or the valuations, or investors really like this company, what could potentially happen. I like to keep a like really broad range where I could see a company going, and today I'll kind of give you that kind of like low kind of forecast and the high forecast, I guess, where I could see it going, and kind of factor in a lot of different cases, and potentially you can see why I bought this company. But these are some situations that I feel like could play out for Tattoo Chef. So currently here I've got some numbers that Tattoo Chef could be doing. So I've got 2020 revenue, 2021 revenue, 2022 revenue, 2023 and 2026. So these are all numbers that I've taken from the Tattoo Chef. So as I'm showing you right now, this is numbers actually that Tattoo Chef have presented. I'm going to say straight away, I do believe a lot of these numbers are very conservative from Tattoo Chef. The reason why is because like this number here that they're offering this year, 222 million. I think in the first quarter they're already doing like 52 million, and that's not considering the amount. I think they're currently in like 4,000 stores, 5,000 stores, and the plan to be in 10,000 by the end of the year. The new partnerships, the new Foods of Mexico that they just purchased as well. I think if they've done 50 million in Q1, they're easily going to keep, you know, if they do 50 million again, 50 million again, you know, we're on about around about 200 million, and that's not including the increase of stores and the new Foods of Mexico. I think like the guidance this year is just so conservative, and I think a lot of this is conservative from Tattoo Chef. So that's something to bear in mind with these numbers. I think Tattoo Chef are being very conservative as well. But this is the year, and this is the forecast of revenue. When we probably actually get round to this year, there'll be a lot more things that you could also consider. Is that by then we're probably actually looking at discounted free cash flow rates. We could be looking at P ratio rates. There'll be a lot more valuations to be using. Today I'm just kind of using revenue numbers just to share with you to get like a bit of a valuation point of view. But let's just say 2021 they're going to do 22 million. And that's going to be 50% revenue rate. So what you'll notice here is actually they're going to be dropping off slightly here. and then 2022 300 million, 35% rate. So you can see this is going to go down. Now I'm not sure exactly why on the forecast it says here we're going to do 500 million in 2023 with a 66% jump. That's just something really strange that I did spot in the guidance. I don't know why we're going to have such a decrease and then a big massive jump, but maybe they're planning some international expansion in that period. Maybe that is why the forecast is in there. And then on 2026, they are forecasting to do $1 billion in revenue, which would be an amazing achievement if we could get there. And pretty much one of the reasons why I bought into this company is that I feel like one day they will do 1 billion in revenue. Now, from 500 million to 1 billion, over a 3-year period would mean they would have to grow at 33%. So we are going to see a little bit of a jump and then drop down. And then it's going to go down to 33%. Like I say, I think this is quite conservative, but still a company growing at 33% would be very healthy. But I think this could be very conservative. Now the big thing when you're kind of looking at a lot of these valuations is like, you know, how do you value this? And this is what I say, this is why I kind of like people quite often I get asked like, what's a price target? And I say, I just can't give you an exact one because so many different factors could come into place. Like I can't tell you in 2026 what a 1 billion revenue company is going to be valued at that is in the kind of plant-based space that has a balance sheet, profit. I couldn't tell you exactly what it's going to be valued at, but I can give a good estimate where I think it will be. And that's why it's very hard to predict exactly where it's going to go, but this is kind of what I'm going to show you, some ballpark figures that I think. Now at the moment, this company is valued at 1.6 billion. When I started buying this company, because I think I was actually the first YouTube channel actually to cover Tattoo Chef. But when I started buying this one, it was quite a while ago. I bought this one about a 1.3 billion valuation. So I'm running these numbers off my valuation, not where it is right now. But even so, if you kind of did that, there's still a lot of upside from the current prices, in my opinion. Now, the thing is with Tattoo Chef is like, it's a great company. Like you can see here, you know, the big thing is like when you buy a company, you want to have profit growth, revenue growth, and you also want to try put the odds in your favor by picking a great company up at a great valuation. Like you can buy a great company but an expensive valuation and your upside is going to be limited. Don't get me wrong, a great company will still go up in value, but there's going to be a difference between if you buy a great company at cheap valuations or a great company at expensive valuations. Now when I look at this, and I bought this company at a 1.3 billion valuation, and I saw what the potential revenue growth is and what they've already done as well, and I always thought, you know, this will be a $1 billion company one day in revenue. I thought for picking this up at 1.3 billion company was absolutely amazing. So what I'm going to do now is I'm going to run some numbers off it and where I potentially see it. Now at the moment, Tattoo Chef currently trades around about 5 to 7 times its sales. So at the moment, that's the current valuation we work off. Somewhere between a 5, 6, 7 is where Tattoo Chef normally trades at. So if we were to do a 1 billion in revenue in 2026, if we were to trade at 5 times the revenue that it does put in, at the moment at a 1.3 billion valuation where I bought it, I could actually make 284% on this one. So that's my conservative 5 times where it's at in 2026. Like I say, you know, normally it trades around a 6 or 7, and I still think it's, even nowadays, it's a cheap valuation. In my opinion, this should be trading a lot higher. But if worst case scenario and this trades at this sort of, you know, the thing is like, what exactly do you think it's going to be valued at? Like it's really hard to predict what in 2026 a 1 billion revenue company is going to trade at. And there'll be a lot of other factors that come in place. But I think if you're realistically thinking, you know, a 33% revenue growth company, 1 billion, amazing balance sheet, good management, they're probably somewhere, you know, at this point going for international expansion, should have an amazing balance sheet, profit growth should be good on it. I mean, we don't know, but you know, my worst case scenario and what we currently trade at right now is that my worst case scenario is that I make a 284% return in the next 5 years on Tattoo Chef, which would be really good. Like, you know, I'm trying to make over 100%. If I make 100% in 5 years on a company, that's 20% every year. That's a pretty decent return. If I make 284% in the next 5 years, that's even better. So that would be that worst case scenario. Tattoo Chef is still going to do absolutely amazing. Now let's just say if it does 1 billion revenue and it trades at 7 times its revenue, it's going to be a 438% return, and that's my medium case. Now at the moment, this is where it roughly trades right now, so this could be I think is probably about right. So if it trades about right, it's 438%, which is still a very good return. Now, if it does 1 billion and trades at 10 times, which it hasn't done previously, but when you look at what a lot of companies over like this, the thing is, we don't know. The food and beverage space always trades a little bit lower valuations, but if it did manage to get there, because I do believe that this is probably where it should be valued at right now, and it isn't, but if it did do 10 times its sales, that would mean 669% return on the share price, which is pretty good. And realistically, I think, in my opinion, it should trade around here. I think it should trade, the thing is with this company as well is like, I think it's too cheap. Like, in my opinion, Tattooed Chef, in my opinion, is an easy like $24, $25 stock right now. And obviously, we're talking low 20s. So I think it should be a lot higher than where it is right now. So in my opinion, this should be somewhere between this sort of return. We'll see exactly what happens, but that's where I can see it going. But this is where it gets kind of crazy. Now, this is what I don't think this would happen, and don't ever think like this is like a dream reality, a dream expectations. I don't know if you'll ever get to these, but I said earlier today, or earlier in the video, that food and beverage companies tend to trade at cheaper valuations. There's two companies that currently break that rule. One of them you might know because I own shares in them as well, which is Beyond Meat. And another one which is in the beverage space, which is Celsius. Now, I believe Beyond Meat trades at a very rich valuation just because it had lost a lot of its revenue last year, and would trade at would have a lot higher revenue if it wasn't for the CV situation. So I think that's kind of impacting numbers and why it looks a little bit more crazy value than what it is right now. And the other one is Celsius. I think Celsius has just been on a good run, and it's probably a very overvalued stock in my opinion. But just to put it into context, is if Tattooed Chef traded in 2026 the same valuation as what Beyond Meats does, which is 21 times its revenue, that would be 1,515% return, which is crazy. It is crazy. And then this is where it gets absolutely nuts. If it was to trade at the same valuation what Celsius does, it would actually be a 2,361% return. Like I say, don't ever expect it to do that. I think that Beyond Meat is just looking kind of crazy at these valuations because it's lost half its revenue because of CV, and Celsius is just way overvalued, and I think that will have a correction at one day. So just shows you though, those are companies that are kind of breaking the trend of valuations, and that just shows you what could happen. But I just wanted to compare it to them companies, which I think are very interesting. But realistically, kind of coming back to my realistic numbers of what I see what Tattooed Chef could do based on if they can do these numbers. And like I said, I think even like this 2026 doing 1 billion, I still think that by the time we get to 2026, they could be easily doing more than 1 billion in revenue. I think this is all very conservative as well. But realistically, my worst case scenario on Tattooed Chef is that I come out somewhere with like a 284% return. And when I invest, like I said, I don't want to put too much pressure on it, because like I said, I invest in for 2 to 5 years, 100% return. But realistically, I think that could be somewhere worst case scenario where I do end up. Probably like realistically, if it keeps the same valuations up, 438%, and where it should be trading at in my opinion, and where I think it will do one day once these kind of like short interest is really high on it. I think when people realize how good of a company is, when it's kind of carry on putting in the revenue, it's well known, the market cap goes a little bit higher, the institutions come into it. In my opinion, when it's at this sort of valuation, we could be talking about 669% return, which would be absolutely amazing. I think it'll be somewhere, in my opinion, it will come, like I said earlier, somewhere between these two where it'll be. But overall, like I said, I went into this company thinking I can easily get 100% return from it. I think it's a great company, it's such a cheap valuation. But when you actually start running the numbers long term, I think that there's a lot of potential in this one. And I think, in my opinion, like this for me is a company that I look at and I think this is easy 5x potential. Realistically, I think it could even do even more than that, because I think this guidance is conservative. But I never want to shout it out too loud when it can put the pressure on the company. But I think this is has so much potential, and I get in these companies for 100% return. But I'm looking at this one thinking it could 5x, and I believe it will do. Looking at some of these guidance here, like I say, there's a lot of different factors that will come in by the time we get here. It wouldn't just be this simple, but these are kind of numbers that I run on it and think, yeah, I've got an easy 100% return here for sure on this one. But yeah, I hope you enjoyed it. I just wanted to give some positive news out there on Tattooed Chef after it had a bit of a rough week. But yeah, I hope you enjoyed the video anyway, and especially like when if you're new, subscribe. And I'll see you next video.